Good morning, everyone, and thank you very much for joining me. This is the morning market review. It's Thursday, it's the 18th of May. My name is Russell Shaw, Senior Market Specialist at FXCM, and my email address rshaw@fxcm.com. Just going to go ahead and bring up our disclaimers. I'll start off with a high risk investment warning. Keep this on screen for a few moments. Good morning, Zanetta. Welcome. And thank you very much for joining. Thank you everyone for signing in this morning. It is much appreciated. I'll just keep the high risk investment warning on for another few moments. All right, here's a commentaries disclaimer. And our reference is Market Scope and Trading View. I think we'll spend today on Market Scope. I'm just going to bring up the DAX. A lot of the analysis we're familiar with. We're familiar with the uptrend, higher trough followed by higher peaks. We're familiar with the momentum that is moving along nicely between 50 and 80. What's interesting is the support that is around the 15.8 level. Let's call it the 15.8 level. It seems quite resilient. It's hit it a number of times over the last 5 weeks. 1, 2, 3, 4, and here it yesterday it showed its resilience again. And if we go down to the daily chart here, again, a chart we're familiar with, there is this squeeze. There's a squeeze going on. And the idea here is we want to look at the zones and try and use the zones as a navigation tool as to which way the expansion is going to be. Given that we've got a weekly uptrend, I prefer the scenario where there's an expansion to the upside. Now, yesterday, we talked about the debt ceiling negotiations, and I was expecting some sort of overhang. What subsequently happened is that the market is quite optimistic that the debt ceiling negotiations are actually going to go ahead, and there is going to be some sort of consensus that's going to come out of this. And I think that the debt ceiling negotiations are a headwind, but once there is a resolution, it becomes a tailwind. In effect, so it happened a little quicker than I thought. It's moved from zone 2 into zone 1, and you can see that the daily momentum is also bullish. It's between the 50 and the 80, and it's holding. Now, what's interesting to me is we've got a little bit of red that's appearing in zone 1. So we've still got the squeeze on. We've got a movement into zone 1 and a little bit of red. So perhaps there's a pullback that we can take advantage of. Now, let's just examine what happened yesterday. When we did our morning market review, we saw that there was this tight squeeze, and I put in the support and resistance. It broke out. You can take these out, and you can see here is trigger 1, here's trigger 2, and then of course importantly, the stochastic made its way through to the upper quintile and held. There's the swing, right? Once it makes it through to the upper quintile and holds, we've got an underlying bullish momentum. So the momentum is still in the upper quintile, and I think that is a net positive. There has been some sort of pullback here, 1, 2, 2, 3, and it's going to be interesting to see if it pulls back towards the central pivot. If it pulls back to the central pivot, that may be the next support level. So 1, 2, 2, 3, and then potentially the push up. Remember what we drew yesterday is it's the pullbacks, the corrections that offer the opportunities here. So is there some sort of corrective move that we can take advantage of? The other points to look out for, if we don't make it all the way back to the central pivot, where is the logical support level? Well, if we just go back to technical analysis 101, it's round about here. Okay, so sort of, I'll put this as a dashed line because I don't think it's as strong as the central pivot. I think the central pivot here is stronger. Central pivot here has a confluence with that level, that level, that level. So I think the central pivot here is the key level to keep an eye on. But perhaps just see if the this extremity over here. I'm going to keep an eye on this level here. All right. Let's take a look at NASDAQ as well, because NASDAQ is a risk-on type of index as well. And let's do a similar type of analysis here. So we'll go through to the NAS 100. All right, and let's go through to the weekly chart. And you can see really strong week for the NASDAQ. Okay, now you've got higher trough, higher peak, higher trough, higher peak. Now, something interesting about the tech results, and I think we've mentioned this before, but it's definitely worth mentioning again, is that a lot of the big tech companies, Apple, Meta, Alphabet, came in with announcements for share buybacks. And that's often used by company management as a signaling mechanism. What's the signal when a company says that we're going to buy back our shares? They signaling that they think that their shares are undervalued. So we've got a good momentum here. We've got the shift from this green trend line to this orange trend line. We've had fairly decent results, and we've got share buybacks that are in play here. So the NASDAQ trend, well, that remains very interesting indeed. And we'll just keep monitoring that. If we go down to the daily chart, it's in zone 1. And here is the expansion in volatility. The expansion in volatility is happening here. It's happening here. And it looks as if we're about to get the bottom Bollinger to now start moving in that upwards direction. In other words, the trend starting to set in. We're not overbought yet. It's worth just keeping an eye on the RSI, because we are tending towards this level where perhaps some profits are going to be taken. Okay, so just keep an eye on the fact that we are tending towards overbought. I just want to see a comment that's coming here from Gurdeep. Acceleration of the trend. You're referring to the NASDAQ there, Gurdeep? So the acceleration from the green to the orange. And then I think that the Bollinger Band now is starting to reflect that as well. Yeah, absolutely. Zanetta just commenting on the German 30, saying she expects some sort of pullback. All right. And Gurdeep saying not far from the 80, so we've got to be careful. Yeah. So just keep an eye over here. I think that there may be some profit taking that comes in, but again, that profit taking, it's that pullback, that corrective leg that we really want to focus on. Okay. Let's just go back to the DAX to see what Zanetta is referring to here. All right, so Zanetta's analysis suggesting some sort of pullback. maybe some sort of moving average that you're referring to. I think that the idea here is to just watch the zones. If we stay in zone 1, I would expect some sort of strength. If we pull back into zone 2, then the bullish momentum waning. She's just referencing the monthly chart. So perhaps just taking a look at this level here. Okay, I don't see us at too overbought yet, but certainly I think the way I would like to take a look at this is really use the zones for our navigation. Really just because as long as it stays in zone 1, we've got the probabilities to the upside. As long as it goes into zone 3, we've got the probabilities to the downside. And here's our no man's land. So let's just keep that in mind there. So we've done DAX, we've done NASDAQ, we've seen the NASDAQ move up. Now, there is a divergence that's happening with the dollar. The dollar is actually gaining strength. And it's gaining strength whilst the risk markets, such as the NASDAQ and the DAX, are pushing up. That's not a normal movement. We've just got to be careful there. My chart just hanging. Let me see if I can find a. Here we go. I beg your pardon. So, so the dollar here showing some strength. It's got this higher trough in. What I suspect may be happening here. Okay, is I think we may be going into a trading range in the let me take a step back because the analysis has evolved. Initially, I was looking at this as a left shoulder, as a head, and as a right shoulder. I'm not sure that's the case anymore. This right shoulder is looking a little bit too extended. So let's take this out. Let's take this out. And let's take this out. Let us look at this with fresh labels. So let's put in a trough over here. Let's put in a peak over here. Okay. Now that we've got these references, we can start monitoring what's happening on the supposedly right shoulder. And what's actually happening is that the 12,800 here on the FXCM US dollar basket is actually holding as resistance. In other words, there could be a higher trough here. But I'm a little suspect about this because the risk markets are behaving quite bullishly. If the risk markets are behaving quite bullishly, remember the US dollar is a safe haven. So if there is a risk on, then the dollar typically would have a headwind. So I'm just wondering if we get a lower peak here. Again, it's very difficult to say. We can't make predictions. We really have to sort of, instead of forecast, react to what we see. But I just wonder if we're getting some sort of movement like this. But let's not confuse the issue. At the moment, the dollar is showing some sort of strength. Let me just see. There's a comment here from Chris. Okay, Chris. So Chris is just asking what these indicators are, and he's quite correct. These are Bollinger Bands. So the first Bollinger Band is your standard 20 and 2, and I've taken out the moving average because I want 3 zones. If we put in the moving average, then we're going to get it 1, 2, 3, 4 zones, right? So just take out the average, but keep in the 20 and 2. And then the second one that I use is a 20 and a 0.75, 20 and a 0.75. And what that does is it gives us sort of a map to work with. It's not perfect, no indicator is perfect, but it helps in terms of, well, we can see with the US dollar, it's sitting in zone 1. What's happening with the RSI here, Chris, is that it's above 50. I'm not big on using divergence, as I know that a lot of analysts do. What I like to see with the RSI is its position relative to 50. Is it above 50? Well, that's on the bullish side of the indicator. Is it below 50? Well, that's on the bearish side of 50. So there's an overall recognition of which direction the momentum's in. But then I use 20 and 80 as overbought, oversold levels. By the way, just the settings on the RSI are slightly different as well. I use a 10 and then use a median, so high-low divided by 2. Okay, so just Anna's got a comment in here. Let's just take a look. Yeah, what is the 1 month doing? Are we not in a state of pause while the debt ceiling issue is resolved? Anna, it's a terrific question. It's a terrific question. I'm not sure I have the answer for that. Let's see if I can bring that up. So the 1 month over here, if we take a look at the weekly, you can see that there has been, the risk markets haven't shown a lot of stress in terms of the debt ceiling, and the fixed income markets, specifically the shorter term, the 1 month, okay, has shown stress. Where is it shown stress? Well, just take a look at the yield. This yield is a gigantic yield. 1 month is yielding 5.64%. 1 month is over 5%. You go to the 10-year, just to show you the 10-year. Now, you would expect to earn more on a longer dated bond. That's not the case. Here you're earning under 4%, 3.5. So you're earning more yield on a 1 month than you are on a 10-year. Isn't that crazy? And that's the inversion of the yield curve. Okay, there is an inversion that's potentially pointing to recession, right? So what Anna's asking, but what about the stress on the 1 month? There's no doubt about it, Anna. There is a stress on the 1 month, and I think that is directly related to the debt ceiling. You're quite correct there. What's interesting is when I've changed this to the daily, is I just wonder if there is a modicum of resistance here. In other words, have we seen the full extent of the stress? So we've seen the stress all the way up to the sort of the 5.64 level. Okay, is it possible that we see a higher yield, or are we probably at the zenith? You know, are we at the top of the move? And if we're at the top of the move, then maybe we are looking forward. Maybe we are looking forward to a resolution in the debt ceiling. I don't know. I'm a little sort of in between here. Yesterday, I was of the opinion that this debt ceiling negotiations is going to go down to the wire. I was thinking that the Republicans and Democrats are really going to have a go at one another and then sort of drag it out. And I think if that's the case, then the market feels the pains, specifically the risk markets, which have ignored the debt ceiling up until now. What's interesting to me, Anna, is that the market is actually interpreting the latest meeting, which was on Tuesday, as a positive. So there was some positives that came out there. So there was new appointments to try and bring the sides together. Both sides seemed optimistic. Kevin McCarthy said a deal could be reached before the end of the week. President Biden cut his G7 meeting in Japan short. He's coming back on Sunday to ensure that there is time for the debt ceiling negotiations to go ahead. We've still got time here. The X date, according to Janet Yellen, is 1st of June, and that's not a fixed date. There's going to be a range there. Gurdeep, I think, has made a good point here. It's all about the words. I think that the market here By the way, I would suggest that the market can get spooked very quickly. Remember, fear is a strong emotion in the market. So we've got to just be very careful of the of falling into a trap here of, well, the market's positive over the debt ceiling negotiations. It could still drag on. I'm a little nervous about it. Anna writes, nobody really believes there will be a default. It's inconceivable. The Republicans want to get as much as they can out of it. I don't think there can be a default. It is inconceivable. But the longer it drags on, the more it's going to be, the risk's going to be priced into the market. Again, I'm very nervous about it. I think that it is a headwind. If we can get resolution on it quickly, it disappears, becomes a tailwind. And I think that that is the difficulty. How quickly do we get the resolution? All right, it's just gone top of the hour. Let's have a quick look at the DAX just to see how it's opened, and then we will end off. If there's any other questions, please go ahead, or comments, please go ahead and type those in. I'll read those out. Okay, so DAX actually having a risk on start to the day. Let's go through to the hourly. They're very strong, very strong. Okay. Wow, very strong. We're getting angular and separation in the moving averages. Take a look where the stochastic is. Stochastic is staying in that upper quintile region. I'll just put the settings for the stochastic out as well. It's 15.55. Okay, it's 15.55. All right. So it looks like we've started the day. A strong risk on move. Strong risk on move. It does seem, Anna, that there is an overarching theme of positivity when it comes to the debt ceiling. Let's see if it lasts. All right, guys, there's no further comments or questions, so I think we can wrap up here. Thank you very much for joining me today. Have a great day ahead, a great evening ahead. Please join me again tomorrow morning when we shall look at the markets again. Thank you very much, guys.